All right, all right. We are live. And today I'm here with Jamie Lane, Air DNA. Thanks for coming to hang out with me, Jamie, for a minute.
Yeah, thanks for the invite. Hopefully we're not talking about anything controversial today.
No, not at all. Definitely don't expect to get any hate mail or anything like that. I think it's funny. It's like you can't do anything these days without getting some sort of hate mail or negative feedback. It's like, yeah, it's very, very difficult to stay PC these days. And I find myself like I don't lean a particular way in politics. To be frank, I pretty much hate all politicians. And so, it's like but yeah, it's difficult these days to figure out what you can say and who you can say to. Have you been keeping up? Are you watching The White Lotus?
I am. I just watched the latest episode last night.
Yeah, so
Yeah.
crazy show. And but they had it, they're like these three friends that have been friends forever, and the one moved to Texas, and she's like, yeah, we love Trump. And the other two are like, they're just stunned, they don't know what to say. And it's like, I just miss the days when, yeah, you could be what you were and nobody, maybe somebody had an opinion about it, but it wasn't quite so controversial all the time.
Yeah. I'd say my politics have very much shifted recently to pro STR, pro travel, and pro tourism. So what policies, what things really help our industry, and especially at AirDNA, because we've got a very public and sort of persona in the industry across all of travel. So what can we be doing to help the industry continue to grow, and really and give people the information they need to like know what's happening and
Yeah.
how these changes to policy can actually impact their business, because some of it's good, some of it's not so good.
Yeah, exactly. I think you should run on that premise. I like it. And you probably win these days. Okay, awesome. Well, I know the original reason I reached out to you about doing this live was about a political post, and I forget the exact context. Maybe you remember better than I do, but it was something about, how is the Trump presidency going to affect short-term rentals?
Yep.
Yeah. So what I guess, yeah, starting there, how do you think the current administration is gonna, and this is we'll disclaimer this, right, as you have to everything nowadays, that this is not pro or anti anything except for, like Jamie said, pro short-term rentals. So we're
Yep.
not whoever was in office, we'd be talking about the same thing. So what we want to look at is the current administration. What do we have to look out for? Is tax benefits or deductions or travel things?
Yeah. And something I like to say and to start with is like, we've been tracking short-term rental data since 2015. Prior to looking at short-term rentals, I was in the hotel industry tracking hotel data. That time series went back to the 1930s. And there's one thing about travel and tourism is it's up and to the right. It doesn't matter who's president. And there's been hiccups, there's been recessions, there's been COVID. But as of today, there's 50% more demand in the US than there was prior to the start of the pandemic. During the Obama administration, travel went up. During the first Trump administration, travel went up until it didn't, but then it came right back. Things have been very positive. That said, and there's actually this organization that is called Brand USA. USA is a brand, and you can't get around the fact that there has been significant and changes in how, especially international travels. I think domestic travelers, maybe there's not a whole lot of presumption,
Yeah.
change in perception around sort of domestic travel. But there's definitely been a change in perception. And I would say not necessarily because of Trump, But because of this sort of new wave of tariffs that have been proposed and have actually now been going into um, um, uh, enactment of
Yeah.
um, if the U.S. is going to put forward these tariffs, I'm going to think twice about where I'm going to travel to.
Yeah.
Um, and just to put some numbers around it, because not every market is impacted. Um, Around 89% of travel and short-term rentals in the US is domestic travel. So it's Americans traveling inside the United States.
What was the percentage again?
89%.
Wow. I wouldn't have guessed that, to be honest. I would have thought that there's a bigger delta there. But I guess, to your point, it's going to affect different areas differently. I imagine that it affects Orlando a lot more heavily than it does the Smokies, which is more of a drive-in destination.
Yeah, and a typical mountain market, it's about 92% of demand is domestic. About 8% of demand is international. And like even look at that, it's like, oh yeah, well, a lot of the demand in Aspen is from international, the elite sort of flying in and staying in large villas. But international demand is very heavily influenced sort of urban areas. So
Yeah.
Miami market, 30% of demand. New York, San Francisco, LA, north of 20%. But most small, mid-sized, sort of southeastern, um, either mountain or coastal markets. Like you go down to Rosemary Beach, it's 99% domestic. So if
Yeah.
you're a short-term rental host in Rosemary Beach, like you could care less what's going to happen to changes in international demand. But what actually has happened and why someone in Rosemary Beach should care is, and I'm in Atlanta. My family drives down to the Florida coast, the Panhandle. And what you saw for a typical sort of domestic traveler is someone that was going to travel overseas, stayed domestic. And now we've actually have seen some weakness in those domestic sort of beach locations as people that were staying domestic have now started traveling overseas again.
Yeah.
And this is sort of the crux of what's I think is going to cause a weak 2025 for some domestic demand is the average American is still traveling overseas, and that's going to still grow by about 5% this year. And it has been growing anywhere from 10 to 15% the past couple of years. Um, but we expect now to see a pullback in inbound demand to the US.
Hmm.
So we're seeing more Americans travel overseas, and we're seeing less international guests travel into the US. And we're already starting to see that impact from Canadians traveling into the US. Um, March sort of preliminary data showing it down about 10% on a year-over-year basis. And March is the most popular month for Canadians to travel to the US. So you
Yeah.
have
Sick of the
snowbirds
cold.
down. Yeah. So maybe we're through the worst of it, but I'm looking at other forward data from sort of the airlines, and they're definitely calling this out. Of we're now seeing inbound weakness. The CEO of Accor, which is a big hotel brand, said they were seeing hotel demand from international travelers into the US down 25% for some
Wow.
bookings. So that's 25% decline for anything is something to at least be a little worried about.
Yeah, no, for sure. Actually would have expected that the Canadians, because you're seeing a huge push by Canadian right up there right now, and I would have expected more than a 10% decline. So I think if that's the worst of it, it sounds like that it's going to affect things a little bit, but maybe not as much as we thought it would.
Yeah, and so that's international travel. And we'll get through the negatives first, and then we can talk about some positives. How about that? And I
Yeah.
always like to end on positives. Uh, um, So the other thing we're watching very closely, and this can have a more direct impact, especially for small, mid-sized cities in the U.S. And one I'm watching very closely was on our best places to invest list, is Columbus, Georgia. So
Mhm.
can you guess what number one driver of inbound demand for short-term rentals in Columbus, Georgia?
Golf, right?
No, that's Augusta, Georgia.
Oh, okay.
So it is a big time for Augusta right now. It's the base there,
Okay.
so military base.
Okay.
Um, and so um, uh, we're sort of in this Doge environment of cutting federal spending, which in general, and it's hard to be against sort of and cleaning up our fiscal picture. But if you look at where that's going to have the biggest impact, is and we've all heard about and you got to give 5 things at the end of the week that you did. The other sort of changes that Doge has done is if you're going to travel on the federal government's dime, you've got to write like a page description of where you're going, why it's important, and making sure that, and then it's got to go and get approved.
Huh.
So some of I have a hard time telling what's government versus not, but on the hotel data side, there's a company that actually tracks um, um, why people are booking that sort of travel. And so in the US, 40% or 4% of stays are government travel.
Wow.
And in markets like Columbus, it's like 14% are for government travel. Um, and you essentially go through the list of, and another big one, Fort Lawton Beach. There's the base down there as well. And a large percent of travel down there, yes, it's to go to the beach, but it's also because you have a large base. And so if we start to see a pullback in travel, and we've already are seeing an 80% decline in government travel for future bookings, like that starts to move the needle too.
Yeah. Yeah. It definitely sounds like it's going to move the needle.
So
Interesting.
and so as a host, I always think this back to or bring this back to, and as a host, how should you be thinking about it? Um, so it's trying to and understand your guest and understand and who is your guest and how might their behavior be changing. So if you and do see a lot of guests and in your historical bookings that are there because of government travel. If you do historically see a lot of guests that are there because of international travel or their international guests coming in your listings, and that could be a reason for a little bit of concern as we and look at near-term bookings and also getting into the summer sort of travel season.
Yeah, it's really interesting. And I wonder, if you want to post in the comments, if you're watching, are you asking your guests why they're coming? What are they doing? Who are they traveling with? It's good information to have because then you can match the way that you pitch your property to travel trends. So, kind of to what you're saying, Jamie, is like, it sounds like folks in those areas where government travel so big, if that's going to weaken some sort of a considerable or significant amount, that maybe those hosts really need to start looking for other travelers and editing their listings, for instance, to say like, hey, we're welcoming families, or highlighting other things for people to do in Columbus or Fort Walton, right? That advertise the area a little bit more.
Yeah, and it's actually the opposite of what I've been suggesting over the past couple of years because like international inbound has been such a big and sort of area of growth as we've sort of come out of COVID, of like how to make your listing more attractive to international guests. Uh, and unfortunately, maybe not as important. And it is sort of how to make your listing more attractive to domestic sort of drive to type guests.
Yeah. Yeah. Don't you love that when you go out there and you put all this good juju out there and you tell people exactly what to do, and then it ends up being not what they should do?
And
But that's life.
we're in a dynamic environment.
Well, I always say that too. People always ask, like, what's the best type of short-term rental to invest in? What's the best house? And, normally I give them the best house. It's this bedroom count. This is where people are traveling. And then I end it with a disclaimer because it's like, however, I've been focusing on that for about a year now and we've moved the needle. And now actually, it very well could be the total opposite of what I'm telling you because we've shined the light there and we've focused on that for so long.
Yeah, no, absolutely. Yeah.
Okay, well, what's the good news?
So good news. Um, uh, one is just and what's still going on in the overall economy. So when we look at GDP growth, on how consumer spending has been going, and the economy have started 2025 in a very strong position. Um, yes, there's sort of weakness on the lower end of the income spectrum. But if you think about the sort of middle class and above, and they're coming into a year in a strong financial position. We're coming into the year with sort of record low unemployment rates. And it's going to take a lot to sort of knock the economy off this sort of pedestal that it's on.
Yeah.
And we have seen economists sort of raise the chance of recession from roughly 15% to 30% over the past couple months. We've seen a pull down of the stock market 10% over the past 2 months. But if you look at where the stock market is, historically, we're still very strong. You look at the equity positions that people are in terms of their home, like the average homeowner has 30% equity
Mhm.
in their house.
It's
Like
like
they're
50% don't even have, like, 40 or 50% don't even have mortgages.
right. You look at debt service as a percent of their income, still at essentially all-time lows. So the average homeowner, average consumer is not debt burdened at the moment. Their ability to spend on travel is still very strong. Um, and so for the typical American traveler, we actually expect their expend to continue to go up about 3 to 4% this next year in terms of what they're spending on travel.
Mhm.
And that's an amazing situation for us to try to be selling short-term rentals into, to continue to be investing into. So I'm still very bullish on the travel outlook, on the short-term rental demand outlook. Like, yes, we expect a pullback in inbound international, but we still expect a pretty big increase in domestic. So we're still calling for a 4% increase in overall demand in short-term rental this year. Uh, Fortunately or unfortunately, depending on what seat you're in, and supply is only expected to increase about 3 to 4%, and so we actually expect occupancies for short-term rentals to continue to increase. We had been on a sort of downward spiral from 2021 to 2022 to 2023. 2024 was slightly up
Mhm.
nationally. In 2025, we expect to be up slightly again. So we've definitely broke that downward trajectory. We were able to stabilize and start to grow again. And with the stabilization and occupancy, that does mean that we're starting and we've broken the sort of rate cutting cycle. So if you're seeing your unit getting less bookings and you see like, hey, I want to get those bookings, the easiest way to do it is to cut your prices, to cut your rates. And we were seeing while occupancies were falling, the average daily rates of the average short-term rental were falling as well.
Mhm.
But in this past year, we saw rates start to turn positive again.
Yeah.
And that can be a real big mental change for the industry of like, all right, how much do I need to cut rates this year to be able to compete? Versus like, all right, demand's going to be there. How much can I increase rates to increase profitability in my investment. Because
Yeah.
if you think about what is the one way to increase profitability, the easiest thing to do is to charge more for the same thing.
Yeah. That's
Like,
exactly right. And we're actually seeing from the sell side, the last few years, we're kind of in a new cycle here because the last few years, if somebody was selling an active short-term rental, for the most part, it was because it wasn't doing well for whatever reason. And some of that was management, some of it was just bad. They bought in a bad market, they bought at a bad price, they didn't invest enough in amenities and design. But this year, what we're seeing is people are calling us that are actually doing incredibly well. And the reason that they're doing that is because they built up a lot of equity in their properties. So they're rerunning their return on investment calculations and doing an equity analysis and looking at, well, yeah, I only invested this in this property, but now it's grown so much via appreciation or forced equity plays that they've got this amount of money sitting in the house that they really can't touch. Interest rates haven't come down like they were supposed to. They've ticked down a little bit, but for the most part have stayed pretty steady and fairly high for at least the last few, comparing it to the last few years. And so to unlock that equity, people are looking at, well, maybe I should just buy 3 of these things. And by doing that, they're actually accelerating the other forms of ways to make money, ways to earn revenue in short-term rentals, like additional appreciation. Because you take a $1 million portfolio and you change that, trade it out for a $3 million portfolio by leveraging more, right? Going back to the bank and taking your 400,000 or 500,000 in equity and leveraging it out to $3 or $4 million in real estate. That's going to now appreciate at a much higher level than the $1 million in real estate would have. And so, while cash flow might be the same because your expenses are going to go up, you're kind of leveraging tax benefits, appreciation, and debt pay down to different levels than you were getting on just the one piece of property. So we're seeing that, and I think that that's going to be huge this year. Is people are finally, for the first time, going to be able to start trading these things like businesses because the revenue is actually going to be there for them. Before it was like, well, the revenue sucks, so they might as well just trade this on what it's worth as a residence, right? As a sales comp approach. And now I think we're really going to get into seeing some premiums on revenue where people are making $100,000 or $200,000, yet the hundreds of thousands they have in equity in the property can actually make them more if they take that and leverage it out to multiple properties. So I think we're going to see that this year. I think that this really is going to be the year where we see that for the first time.
No, that's a great insight, and something, and I would say as a positive for hosts and for maybe a negative for investors. Like, and we do expect, and interested in your thoughts here too, of like interest rates to stay higher for longer. Like, we're not going to get down into I don't expect into a sub-6 interest rate environment this year, maybe even in the next, unless we go into a recession.
Yeah.
And I would, and I've heard theories that that maybe Trump wants to take us into a recession so we can bring interest rates lower and refinance debt at a much lower rate. Like, for people in the travel industry, I can tell you guys, looking at the data, we do not want a recession.
Yeah.
That really cash flows in ways that I'm, and maybe we could get into on another chat if sort of recession risks really increase. But yeah, it is not good for cash flow if we get into into a recession. So yeah, and with interest rates being high, we don't expect investment to really accelerate this year, and that's, I think, going to be a great thing for the vast majority of the industry. That we're going to go through a few years of 3, 4, 5% sort of supply growth, which gives us a chance, demand a chance to catch up, occupancies a chance to stabilize, give us, I think, for the savvy investor, like, give us a really and good chance to know, like, what is cash flow in my market, what is stabilized income, what can I actually expect with confidence that
Yeah.
any property is going to earn. And then, what are the things I can do to really upgrade that revenue? What are the changes I can make to the property? What are the things that can deliver sort of outsized performance, which for the casual investor, and maybe it keeps them on the sidelines because of the sort of scary 6+% interest rate. But for serious investors, that it gives them a chance to sharpen their pencils, find where great opportunities are, and continue to expand their portfolio.
Yeah, yeah, I totally agree with you, and that's really what we're seeing, both locally and nationally, right here in Asheville. And plus, we had this hurricane which cratered inventory, which was incredibly good for our area. We lost, I don't know if you've seen this, but we lost 21% of our Airbnb inventory in the area, which is incredibly good for everybody that's left. But to your point, everybody that's asking for lower interest rates, that just is going to make a whole lot more competition. So pay the extra couple $100 a month, but we're seeing people pay ADRs and revenues that we've never seen before, I don't think, and that continues to go up. And for everybody out there who thinks that from me this is just lip service to get people to buy more short-term rentals, I'm under contract for 2 more right now, and I've got a backup offer on a third one. So I'm all in on this, and obviously that means I firmly believe that we're in a really good place for short-term rentals right now. To your point, like, it's been such a run-up of inventory the last few years, and that has really, really slowed down finally to give everything else a chance to catch up. But I think really we're seeing this industry mature to a level where these things are almost looking like little mini 5-star resorts in and of themselves, and almost this luxury class getting to a whole other level. That's really interesting. We never thought in Asheville that people would pay $2,500 a night, $2,700 a night. And obviously we're not there in ADR yet, but we never thought they do that even for holidays or weekends or whatever. And we've seen that now dozens of times. And it's enough to where investing into the property, $200,000 or $300,000 into design and amenities has been more than worth it. Kind of upgrading this luxury class of short-term rentals here in Asheville. And then we're starting to see that kind of out there all over the country, right? Going from these more mom and pop places to these more mature short-term rentals. What do you think? Is that going to be the future of short-term rentals as the luxury class?
And there's gonna be a piece for that, and I think, and that's my favorite. One of the strategies for deploying money right now is redeploying it into properties you have, and being able to and see the greatest ROI from and investing in amenities, investing in things that you can sort of prove out. You can maybe do a HELOC some way to not have to refinance your entire property, take some of the equity and reinvest in that property. Absolutely, seeing more and more people doing that right now, and it being successful. Um, yeah, and yeah, and I'm very bullish on that right now.
Yeah, yeah. I mean, that's really what we've seen, is people coming in and reinvesting into their properties. And I think that will also take some cash out of the new purchases as well. So that's going to slow inventory growth in and of itself, as people investing into the properties that they already have, which I think we've seen is an incredibly good thing. One thing I'm looking at right now, I've almost anytime I'm on the phone with someone, just by the way, I'm looking at AirDNA, and this is not just a plug for AirDNA, but I love the data too. And so I was actually just sorting by revenue, all listings in the US. There are so many of these huge listings in Gatlinburg that are doing incredibly well. And it's almost like it has the highest saturation of the best performing properties all in one place. Yet it's not like Gatlinburg is the mecca of travel for all of the U.S. It is a mecca of travel for the U.S. certainly, but it's not the mecca. So why is there that concentration of properties there? I think it's really only because the builders have built it that way. It really is a market in and of itself where the builders have built that way. And so my thought is, like, if you build it in these other areas in the US that do get, 15 million travelers a year like the Smokies does, why would the revenues not be able to get to 7 or 800,000 like some of those properties there,
Yeah. And one of my favorite things to do is go into Gatlinburg, looking at all those properties of like, because like Gatlinburg, Orlando, some of those competitive markets in the country, right? And like what hosts are doing to get their listing to stand out, like could be a great strategy in 20 other markets that see the same type of traveler coming in, and where people aren't taking that strategy yet. And you can sort of take what someone's done, prove that someone actually wants to book that by looking at the revenues that generating, and like, all right, I think that same sort of traveler is booking that my market, and that sort of amenity, that sort of enhancement could really cause my property to be a top performer.
Yeah, yeah, absolutely. I definitely think that that's kind of what we've done in Asheville, and you can see that in our wish list on Airbnb that we've created of like 60 of, the best properties that I've sold there. And ultimately it's not like that's unique to Asheville. We created that segment here. There was nobody that was doing anything like that. And there are maybe 5 or 6 properties outside of what we've done that are like that in our area, and we've done 60 or 70, and it's still holding up. We're not seeing any of those revenues decline, right? We've almost created a demand in the area for large properties that have all the amenities, and I think if you do that in some of these other smaller areas where it's not proven out, one thing that I think, Jamie, and reinforce this for me, let me know. I think people look at data platforms like AirDNA and they look at the revenue and they think that's all that's possible. And I've shown, certainly in Asheville, for instance, that that's not the case, right? It's just because you don't see it in the data doesn't mean that it can't ever exist. It means it doesn't exist today. It certainly doesn't mean that it can't exist at all, right? And that's what I think really people have to understand is invest by the data. Don't ignore the data that's there. But then, yeah, to your point, go compare it to another market. See what's possible there. Are you getting the same type of travelers? Do you have the same type of traveler saturation or short-term rental saturation? And and get out there. But certainly the best return on investments are where people are taking the biggest risk.
Yeah. And I like when you say like, just because and the numbers show it doesn't mean that something else isn't possible. Because like essentially what we do when we're estimating the revenue for an address is we're going out trying to find comps, comparable properties in that area around that address, similar bed baths, accommodates number of people it accommodates. But no, we're not doing a deep dive into what amenities you're going to be adding into that property. Like, are you going to be going in great on design? Are you going to, it's like the difference between a well-designed, amenitized property and a very weak one and is going to be dramatic.
Yeah.
And so like we're estimating at the average. And as a preview of something that we're going to be releasing something coming out is like we just redesigned Rentalizer. And one of the great things now is you can actually save them. So you never been able to save them in the past. So you can save them, go back, create your sort of list of properties that you're sort of thinking about investing in, updated the numbers over time. But later this quarter, I think even later, we're going to give you the ability to start editing those estimates. So editing the number of which properties are included. So like you see a property in there that's clearly like shouldn't be part of that comp set. Like we're going to let you delete it. If you want to go in and create that set of like, here are the best designed properties in a neighborhood, I'm going to be putting in a comparable one. Like for my comparable 5-bedroom property that's top design in that market, like let me go find the other ones, create that set and generate that report for those set of properties. So it's something we've heard very often. I know when I was investing in the property that I ended up like, I created my set of like, here are the properties that I think I'm going to be competing with, that I think guests are going to be choosing from. and I should be estimating my revenue with this set, not some I'm not the average of what the properties were that were nearby. So
Yeah.
I think that's going to be exciting change and really start to highlight and sort of digging in, evaluating comps and the importance of evaluating comps.
Yeah. I love the new Rentalizer. I was super jealous last week when it rolled out to half of the audience and I didn't get access to it. And thankfully I have a good friend that works there and helped me out with that. And so I'm really excited the new Rentalizer, and that customized comps button can't come fast enough. I think that's going to really change the game, because by far and large y'all have the best data that's out there. And just the ability to then get in and start kind of working with that data, rather than just having it presented to you, I think is really what's going to change the game. So I'm really excited, and I think the changes y'all been making are absolutely incredible. So yeah, thank you guys for all your hard work on the platform. I think everybody that I know has said amazing things about it lately.
Awesome. Yeah, and it is out to 100% now. So we got through our test. Needed to make
Awesome.
sure we didn't see any declines in sort of user behavior, but and the data for us is showing clearly that people like it. They're using it, they're saving, and they're coming back more. Like in that test, that 50-50 test, we saw 17% more searches being done for the group that had the new design, had the ability to save, had to be able to get back, find where Rentalizer is. So yeah, we're seeing in the numbers that people like it.
Amazing. Awesome. Okay, any parting words? We'll let you try to get some lunch.
Oh yeah. No, and thank you for inviting me and discussing what can be a controversial subject in a here's the facts, here's what we're seeing sort of environment.
Yeah. Cool. Awesome. Thanks, Jamie. Appreciate you, man.
Thanks, Tyler.
All right, guys.